Hey, welcome back, guys. This is part two of two, the process for passive investors and why this might be interesting for you to actually take part in an apartment syndication deal. In this video, we're going to go over a conversational basis of why you might want to be involved if you're a new investor or potentially an interested investor on doing these type of projects. So John and James, welcome back to the Growth Mindset video. I know you guys are from Boulder Creek Investment. Thank you guys for joining us again. And let's go right into the topic of how to get involved for passive investment deals. So we're going to actually go into part two of this video, which will be the process of how to actually get involved in passive investment deals and why that may be of interest to you. So let's go ahead and do that and take it from there.
Okay. I can start on the first few steps here. So as we mentioned before, the process of getting into a syndication or a group investment is a little bit different than, buying a single family home that everybody's used to. This is essentially entering into a partnership with a group of investors, including the GPs, which are the general partners, and then LPs, or which the limited partner passive investors usually are named. But yes, we get into an LLC that's created specifically for this deal, and that will be the operator of this deal, and everyone will share in the returns, the upside and the downside through K1 statements. So that's a real brief overview of how this is a little bit different. It's more of a partnership versus buying the property if you were to buy it yourself. So what we would probably do, once we knew you're interested in investing into a specific asset, is we'd send you an investor package, and that would give you a summary of what the whole deal is about. We'd have some underwriting in there. We'd have demographics. We'd have business strategies. We'd have renovation plans, interior and exterior, and the overall business plan from purchase to sale. So it gives you a good overview of how we would take this asset from start to finish. And then usually we have you indicate, how many shares or how much equity you want in the deal. And then after that, usually give us a few weeks, we come out with a PPM, which is a private placement memorandum, the operating agreement, which is the agreement between the GPs and LPs, the partnership together, and then also the subscription agreement, which mentions this is the entity that's signing up. It could be yourself or your LLC or a retirement account, and how much equity you're going to purchase into the partnership. So that's generally what we would do on the initial contact of an investor wanting to know about the deal.
Gotcha.
Awesome.
Okay, so like John said, the initial part from a passive investor's perspective is really getting to know the general partnership, getting to know the other limited partners, maybe there's meet and greet, who knows, and then really understanding the business plan, getting comfortable and familiar with what the plan is for the property. Like, do I believe in the projected rents? Do I believe in the projected expenses? Do I believe in the management team and their ability to execute on this? How do I feel about the whole thing? So assuming everything looks good and you're ready to move forward, really the next step is just be ready, have that money ready to go. And the general partners, they're working kind of in the background on negotiating, on pushing through due diligence, on getting all the I's dotted and T's crossed. So as a limited investor, your main thing is have your investment ready to go. You'll get some advance notice, anywhere from a few days to a few weeks, kind of depending on the folks you're working with. But when that time comes, I would be very ready to wire in your money. Maybe it's $25,000, $50,000, $100,000. Be ready to go, because oftentimes these syndications oversubscribe, basically because if the general partners are putting together $2 million, let's say, and they come up short. Well, that's kind of an awkward situation. So they'll raise up to $2.5 or $3 million. So it's always very important to be ready to go and act quickly when they say, now is the time, send your funds in. Because if you're the last guy in the door and you're the 2.1 or 2.2 million, then you might have missed the boat. So just be ready to go when the time comes.
Okay, so like how do you meet people then that are doing these syndications deal? Like how do you know you can trust them and view that their process is worthy? Like do you go to meetings or online communities or what?
Some folks meet them online. Some folks meet them at, your local real estate investing club, a real estate investing association. Maybe you meet them through kind of a friend of a friend. I know, Michael, you're kind of getting the word out even through folks that you work with. Just they know you work in real estate, right? So
Yeah.
I don't know, how does that conversation go with you? How do people come to find you and get involved in this kind of thing?
Yeah, so like for me, I usually just talk about how I want to build up passive income and why I think that's just so valuable because you get your time back when you make money through cash flow. And so that's kind of my fun conversation that I have with people when I'm not working is I just want to talk about things that I'm interested in. And so my conversations typically will gravitate towards that if I find there's an opportunity to do that. And so over, years, I've just networking and communicating, I've kind of gravitated people that are interested in that same business model, life goals. And so that even for me, like that's helped me syndicate more money towards different apartment complex deals and just learning about real estate in general. And as you do that too, like I've met people that go to local meetups that are also interested in the same type of business. And so that's kind of how I met. Actually, that's how I met you guys was through a local meetup. In real estate, I known like John, I've known for a couple of years, and then James as well. I've known for at least 6 months, and at least, yeah, yeah. So it's
we go back.
I think that is where you'll meet a lot of probably the more serious investors is when you go to actual meetups because those people are taking time out of their day to go learn and network and be part of this business. So I would encourage you guys if you're new, you just want to learn. Like there's free meetups in your area. Just go there. There's people with a lot of knowledge. Best thing you can do is just show up and ask questions.
Yeah. I think the real estate community is really cool because it's kind of like this alternative thing. Everyone thinks we're weirdos, but like once you get there, people are just super friendly and super excited about like sharing knowledge and making connections. So if you are looking for those types of people or for contractor recommendations or for, a cool dumpster company or whatever, like people are more than willing to share and help you out. So yeah, good call.
Yeah, I mean, I also agree with you guys. Definitely good places to go. Meetups, Facebook, LinkedIn. Generally, we first talk to people, involved in real estate just because that's who we network with. So that's the easiest transition for us to convince people, hey, this is how this process works. This is our business strategy. Here's our investor slide deck. Here's all our numbers. As you can see, this is what we're projecting. And current real estate investors can get on board sooner than someone from, traditional W-2, because that's essentially what this video is more geared towards. I would say people who are unfamiliar with real estate altogether. So, it's definitely different types of investors. But as far as getting to know the syndicators, everything like that, going to these meetings is a great place to meet up with the people and asking them how the process goes, their experience, and their overall view and projections of how a deal like this is going to turn out. So definitely different types of investors and different investments for everyone out there. So I guess we can go into the next step usually passive investors would do, which would be just essentially wait for monthly updates and receive quarterly cash flow distributions. It's that simple. It's a passive opportunity. So, just like Michael was saying, you're gaining your time through putting in some cash for equity. So normally what we would do is we would send out monthly updates, and then maybe every 6 months, maybe even quarterly, depending on the renovation schedule and the turn that we're doing on the property. We'll even do webinars and get questions from the people and show them, where the budget's going, how occupancy rates are acting, anything from maintenance to escrow items we need with the lender. So all those things will update you either through the webinar or through monthly email updates. And then, as I mentioned, cash flow distributions, they'll come through your account through usually ACH, and all you do is we'll message out that they've come out, and you need to just confirm that they're in there. It's that easy. And then at the end of the year, we do taxes, and this is where partner K1 returns come in, and that's going to give you the ability to essentially write off against your W-2 any of our performed cost segregation and any other tax benefits that comes with that. So as far as that goes, that's what we're looking at for the process while we're in the actual deal. Did you want me to go through the business plan, or do you want to hit that, James?
I can talk about that, but
Okay.
Before we switch topics, I want to say that I think that one of the cool things about this type of opportunity as a passive investor, because I think in a cynical mindset, I think, gosh, like, why would I do one of these things? I could go buy a turnkey house, or I could go do my own investing. I could probably make 10, 15, who knows, maybe even 20%. But I think the great thing about these types of investments is you can make similar or better returns. You can get stronger tax benefits, and you don't have to do anything for it. So, walking through what you were just walking through is really cool stuff. But like at the end of the day, like, what do I get as the passive investor? And you get, very similar benefits, maybe even better benefits than if you were out grinding yourself, except you don't have to do anything. So, just one more thing to point out that I think is like just fantastic about this type of thing, and a great opportunity for folks that are able to participate. So, jumping into the business plan, with multifamily, with commercial investments, it's really all about increasing the net operating income, the NOI. So, we can do that through a couple real simple levers. We can increase rents, or we can decrease expenses. A lot of the properties that we're looking at right now, and this deal that we're currently working on, is one where we're doing both. So as a passive investor, now you're not really involved in that, but it's something that you can look for as you're evaluating opportunities. Like, how are they going to be driving returns for this type of thing? So to give kind of a rough example with the property that we're looking at, it was an all bills paid model. So the tenants, they just run one check, and their electric, their gas, their water, their sewer, their cable, their internet, even their continental breakfast was all included. And that's, I know John's got a smirk on his face there, but that's not really normal for that market. So one easy way that we can increase NOI is keep the rents the same, but stop paying the utilities. It sounds easy. It sounds maybe harsh, but that's just kind of the reality of it. That's not normal for the market. Or as we talk about, rehabbing units and increasing rents that way, that's just another lever that we can kind of pull to increase that NOI. So just something to keep in mind as a passive investor. So with that, you're looking for getting your invested capital back through the refi. You're looking at cash and cash returns. And then ultimately, you're looking at maybe redeploying that capital into another deal when that cash out refi comes, or when we go to sell the asset after 3, 4, 5, 6 years. So I don't know. Do you want to take it from there, John?
Yeah, sure. So like we mentioned in our last video, it's similar setup. We'll cash flow through the next few years and usually have a disposition, usually year 5. It could be plus or minus year depending on the market. And then from there, investors will get their other second half of a large chunk of funds, and then we'll try to either defer taxes by 1031ing them into another apartment deal, or people can take distributions. Usually people usually don't not like to take taxes and don't like to pay their taxes, and you like to defer them. So we'll try to put them in another cash flowing deal, and then repeat the process. So it's definitely a more involved overall investment, real estate investment strategy versus the buy and hold or maybe a flip. But at the same time, we find it that much more beneficial because we're building a system where a professional property manager is running this thing, and we have the ability to continue this process for hopefully an infinite amount of other deals.
Yeah. And I don't want to get too far off topic here. Michael, stop me if I'm taking over your video, but I'm curious from your perspective with some of these benefits and like the nuances, the difference between like going out, flipping, doing your own BRRRR strategy versus this type of thing. What do you see from your perspective that is possibly attractive for this type of investment?
I mean, I think the name in itself as passive investor is extremely attracting. For someone that doesn't have much time, or just has money saving up and is trying to compete in this market, single family market, where everyone's doing the same thing. I'm grinding my wheels day in day out trying to find something, and this comes to this point where I have all this cash and I'm like, well, I can't do any deals right now, but I still want to leverage and use my money and grow and make that profit. So that kind of pointed me towards where can I pull a lot of money at once and make a return. And so that led me, talking to you guys about apartment syndications. That it seemed interesting, so I kind of did my own research on it. And then another opportunity came up where you brought this more recent deal in play, and I was like, okay, well, cool. I have funds available. I've learned a little bit about it on my own, and I started going to the meetups and kind of seeing what it's all about. And that's kind of what we recommend, to you guys as well, for viewers out there, is don't just try to pull your money towards this group that you don't even know. You should really get to know your general partners and the people you're investing with, because that's going to be a long-term play, 3 to 5 years. Holding in, it can be a serious amount of cash. So if you understand what business motives are and the game plan, you hopefully will like it, and you'll just continue that process and hopefully grow in wealth all together. So that's kind of what's got me really interested in apartment deals now.
Cool. Very cool.
That definitely makes sense. It's all about a means to an end, like I always tell people. It's not such a big deal anymore to just buy properties. It's all about, the return, the compounding effect. That's how you're going to be able to retire sooner and build those systems. It's not about adding another job or talking about another property. You'd have to spend exorbitant amount of time flipping or rehabbing. So it's all about building the system, passive system.
Yeah. As a passive investor, I think that's such a good point. Do you want to be out there, like Michael said, grinding, spinning your wheels every day, or is it ultimately just about the money and having a good investment? And if it's about the money and having a good investment, then let's be hands off as possible, and leverage other people's time and experience and efforts.
Well, you can donate your time to what are those places that build houses or repair houses for charity. That would be even more beneficial maybe for yourself from a philanthropy perspective. So you could, if nothing else, your passive investment will allow you time to do that.
Yeah, no kidding. Probably more enjoyable that way too, instead of stressing over every dime and penny.
Yeah, you don't have to find the tenant or try to sell it. It's for someone in need.
Yeah.
It's true. Nice. Well, guys, I think we really wrapped it up for that video on really just going over the steps of doing passive investment deals for apartment syndications. That was a lot of fun. I think we covered a lot of good information on how to get involved. And, as always, guys, if you have any questions on the process, or maybe you want to know a little bit more about each of us individually, and we can probably do a questionnaire on how we individually got involved in real estate, and that might be interesting for you guys as well. So let us know in the comments below. Thanks you guys so much for watching these videos, and we'll catch you all in the next one. Bye.
Thanks, Michael.
Thanks, man.
Thanks, guys. Yeah.